All right, this is Jeff Scott. Excuse my radar screen warnings. It's June 15th, 2014. Happy Father's Day to all the fathers. And this will be, I always say this, a brief, because I'm on the road, weekend review, but for some reason they always take an hour, whether they're brief or not. Using a little different format today. I'm actually using the video format within Snagit, and I'm doing this at 1920 by 1080, so full HD. Today's June 15th, and I've entitled this, and I should have put maybe an A time for volatility. Now there's a question mark there, but we'll talk more about that. Disclaimer, as always, this is for educational purposes only. Anything I recommend is a spirit of education, not investment advice. I'm a doctor, not a broker. Keep in mind that most physicians lose money with their investments, and I am not affiliated with any software vendor or trading company. I'm truly independent, and I have paid for all the tools that I demonstrate. I've added more to this, so I thought I'd spend a few minutes. If I was to start a trading company or a trading education company, I would call it something about becoming your own guru. And the point of that, as I've said before, is I really think it's your responsibility to find positive, strong influences, and then whether it's through live meetings, through seminars, live or online, through trading tools and indicators, to try and become your own guru. And this is my wall, and this is the wall of people that I currently follow, some more so than others. And everybody knows Ian Woodward and Ron Brown, really the intellect behind the HGSI, and I've been proud to become working with them. William O'Neill, CanSlim expert, editor of IBD, Daily Graphs, Market Smith and the family as well. Really the godfather of high growth stock investing. O'Neill's disciples, Gil Morales and Chris Katcher. I talk a lot about pocket pivots and Bible gap ups, learned them from them. Alexander Elder, here he is with Carrie at a recent seminar that I attended. Great books, great live meetings, great education. My buddy George Lee, he needs a book, but at least he has his own Edge Rater scans. Great guy. We find similar stocks. We have perhaps a little different strategies of how we get there. Good friends. A new friend, John Person. I'm actually out in LA on Father's Day at a live John Person seminar. He's written a number of books, and it's interesting. He's a ex-commodities and bond trader, futures trader. He's developed a number of indicators that are commonly available. His Person pivots and pivot PPS buy and sell signals are built in. TradeStation, in Thinkorswim. He has indicators for TradeStation and Genesis, among other platforms. Great teacher, been trading a long time. And I love listening to him because even though he uses different words, a lot of the things that he does are the same as I've done in HGSI land, such as sector rotation, seasonality. And he talks about, he can day trade, but he likes to look at swing trades, and it doesn't mind when they turn into positions, which is where I fall. Van Tharp, the king of money management rules. Minervini and Jesse Stein, must have knocked him off. Jesse Stein's supposed to be here as well. Two great traders. Bigelow for candlesticks, couple of websites. This is where my influences come from, and you'll probably see them come through as I talk about trading. I purposely hide my screen because there are very few programs that I don't own or haven't bought at one point. But at the end of the day, I need a real-time charting platform, and I use both TradeStation and Thinkorswim. Frankly, I use Genesis Trade Navigator. Maybe it deserves to be up there as well. And then for analysis, I use HGSI and Edge Rater. I am a big fan of seasonality, and I use Magenta Trader, but I also use Best Choice. And then Market Smith is sort of complementary, I think, to HGSI. There are a lot of things that I can do in both. I like the charting module more in HGSI. but I like the fundamentals and the updates perhaps equally or more in MarketSmith, so I use both of them. One of the things that we like to do in HGSI world is we like to create indexes that give us a sense of what the market is doing. And we know the canaries, Simple, Priceline, Apple, Amazon, Google, Tesla, Facebook, LinkedIn, and Netflix, had a big run into March of this year when they rolled over. And we use these artificial indexes to give us a sense of what the market is doing and to help get us out at the right time or back in. And the canaries died. Certainly the canary in the cage is dead, but they've bounced off the 200, and now they've started to recover. They're basing some, and I think they closed with the doji on Friday, so it'll be interesting to see if they continue their uptrend, if they come back to retest the 200 and the 50-day moving average, and we'll see. But they're clearly off the lows. And then this is an index of leaders that we made in the third or fourth weekend in March. And you know, the intent of a leaders index, and I'll be making one with the attendees of my meeting in Singer Island this coming weekend, is to create a list of great stocks, the leaders at that time, then create an index of those stocks, and then use that as an early warning sign of when to get out of the market. And typically, if we break and sustain below the 50, it means this rally's over. And why would you want to be in the same stocks? Because typically the next rally will come from new leaders. But you could see we're basing. We've gone sideways now pretty much since the time we did this list. And despite the market having some concerns and falling, NASDAQ 100 stocks doing a big rotation out and then back in, we've maintained above the 50. And we're sort of, I think, at an interesting point where this list is still leading. My seminar is sold out. There are two series of videos that will come out of this. The first will be it'll actually be a 6-video set of trading using HGSI, sort of my user manual, and where we spent an hour plus on each of the buttons. And I will be putting that on the HGSI site sometime after the meeting. I did these as private live meetings for those attending because there were a number of new users, and I think it can be of value for anybody that's not real comfortable with the program. The second series is I'm going to record the entire meeting, and then I will sell it at some reasonable price. You know, it's sort of a double-edged sword. I like to give it to everybody, but it's not fair to the people that paid up to $1,100 plus airfare and hotel. So they'll be available on the website as well at some point for those that are interested. Future meetings, the meeting is a go in PV in October. I'll be there in spirit, but not in mind and not in body, because I'll be in Australia. If you're interested, Ron Brown, let him know. And then I'm planning with George Lee to do a summit, most likely the 16th through the 18th of November, which is the Sunday, Monday, and Tuesday immediately before the Las Vegas Traders Expo. We're talking about the 23rd through the 25th, which would end on Tuesday before Thanksgiving. I think travel might be more expensive on that period of time. So I'm leaning towards the first weekend, more to follow. Themes this week, well, the major indices closed slightly down for the week, but still near their highs. Clearly, the risk is everywhere. The economics, the U.S., you get the sense things are slowing down. We're missing on sentiment, GDP, and employment numbers. But then again, we're back to 2008 employment levels, whatever that means. Iraq. Can you imagine the headline news now is that the U.S. and Iran will be meeting at some level diplomatically to develop a joint response? I guess one way of driving two longtime enemies together is to have a worse common enemy. Ukraine, planes being shot down, Russian tanks, and then as we'll see on my trade station, lots of divergences on the indices. So there's lots of risk there. So I guess we're climbing the proverbial wall of worry. Volatility, it's bounced off an extreme low. I think last week I talked about being short the XIV. I'm still short the XIV. It'll be interesting to see where we go this week. As volatility rises, the market sells off. and we are at an extreme low, although we moved up substantially, I think 13% over the last 5 days. Gold and silver are stirring. In fact, on Friday, I think silver was the big mover. Is this real, or is this just a response to the unrest in the world? You'll see the strength has narrowed. It's good to be in oil exploration. That's one thing I'll say for sure. And that interest-sensitive stocks, which have been leading, are starting to weaken. The REITs have rolled over, among others. Other news drivers, it's always important that you're aware of what's going on around you, and you can stop it and look at it yourself. Industrial production could be a market mover. Housing starts, housing market index, building permits. You know, one hopes that the CPI comes in close to where it's at. It's not a big number. Deflation is a big problem. The FOMC meets. Well, we know there won't be anything out of the rate decision, although there could be language about when they start to raise rates. And I'm not sure that there's anything they can say that's good. If they say they're continuing to tighten with reducing their bond purchases, you know, I'm sure that'll upset some people. If they say they're going to take a month or two off from easing or for cutting back on their purchases, then that'll make us think the economy is worse than expected. No one expects a change in rates. On the 19th, we got initial claims, continuing claims, Philly Fed. And then one that's been a big mover for me has been natural gas inventories, where the inventories are below 5-year lows, which is probably why some of the oil and gas exploration plays are moving, and they were moving long before Iraq. Not a busy week for earnings. These are some of the major ones there. Adobe, Lazy Boy, YGE is solar, FedEx, give you an idea of what the economy is doing. I guess that's BlackBerry, Smith & Wesson, Oracle. If you own them, you should know it. You don't need me telling you when they are, but be aware. All right, let's go take a look at the markets. So the first thing I like to do is I like to go into my trade station and take a look at the indices with my elder indicators. So one thing that I use these for, I guess I say it backwards, and I appreciate the feedback I got from one of the listeners. Elder does not use these as a buy signal or a sell signal. He uses them as a filter. When the paint bar is red, that filter says he cannot go long. He doesn't have to go short. He doesn't have to do anything, but it says he can't go long. When it's green, the filter says you can't go short. You could go long, you could stay flat, but you can't go short. When it's blue, you can do long, short, or hold. So we see that the NASDAQ has come off its highs a little bit. It's still in the upper part of its channel, but it's come off a little bit, and it's painting a blue candle. If you look at this top, you know, it didn't take out this high, so there's no divergences being painted here. I'm just looking to see if there's anything else I want to point out. No, not too much. On the weekly, it's green. On the monthly, I can't tell if that's blue or green, but you could see there's been divergences all the way up on the NASDAQ, and those divergences are not currently showing on the weekly. So we're blue on the NASDAQ. The Dow sold off a lot harder this week, and you could see still in the middle of the channel, but the Dow is painting a red bar, and you can't tell real well, but a week ago we were talking about divergences, and that divergences could be a sign of weakening power, and clearly the Dow sold off. You still got divergences. These red dots are potential divergences on the weekly. So red, blue, and blue. The Dow is currently clearly under pressure, and it's in a more of a value range between the two moving averages. The Russell, like the NASDAQ, has sold off several days in a row, still green on the weekly. No evidence of divergences here. And then, let's see, what haven't we looked at? The S&P 500. MACD divergences showing up here. You have a much higher high, and you don't have a higher high on the MACD, either the histogram or the lines. More evidence of a market that's losing some of its momentum. So concerns, definitely we're off the greens. We've got some reds. We've got some MACD divergences on the major indices. And we will go from there. So definitely a market under some pressure. Just responding to a text, I'm sorry. Yeah. All right. So let's move on and go into HGSI. Actually, let's go into the market review portion. So last week I mentioned the major indices were down a little bit. It was not a great week for our types of stocks. The S&P 500 was down 0.68. My large list of buy stocks, but you can see I was about performance of the S&P on my buy stocks, the IBD 50 and the HGS 100 all about the same. Now it's interesting, in my current portfolio I've got a bunch of oil and gas plays, so I was actually up 1.67% on current holdings, and the high beta watch list actually was up as well, which was a little bit surprising because typically the high beta stocks do just like the high growth stocks. So interesting. So what were the big winners? The Tim Higgett filter picked only one stock. It was Micron, which is one of the holdings that I have, which had a nice week up 5.5%, which drove its return. You look at these are bearish groups that actually outperformed for the week. So that tells you it was sort of an upside down week and perhaps a little bit of reversion to the mean. Some of the things that were out of favor moving in and things that were leaders moving down for the week, which is kind of unusual, but that's what we saw. Hindenburg, this is something that we look for. And it's, I've talked about it before. These are the requirements. New highs, new lows, growing 2.2% in the NYSE, rising MA, the new NYSE McClellan less than zero, and new highs have to be less than or equal to 2 times new lows. There's not been a major correction in the last 50 years that did not follow a couple of Hindenburg omens. And let me just, and so I look for evidence of this because there are things that could show me that the market was changing. And as you can see, there hasn't been an omen signal for quite some time. And I won't get excited, by the way, for the first signal that fires. I'll get excited when I see 2 or 3 fire in a short period of time. And so that tells me that we're probably not circling before a major correction, but I don't think we're necessarily out of the woods. In bucketology, 68% of the stocks in the S&P 1500 are above the midline on the Bollinger Bands. From the buckets perspective, you could see kind of that we've moved off the highs and we're sort of midline between the midline and the top of the Bollinger Band. And what this view is doing, it's taking the 1500 stocks in the S&P 1500 rather. It's showing what decile of the Bollinger Bands we might fall, how many stocks are below the lower band, how many stocks are above the upper band, and when it gets extremes on one side or the other, it typically signals a change in the market. And you could see on the 9th, we had 28% of the stocks were above the upper band of the Bollinger Band. And since they only spend about 5% of their time above or below the bands, when you get a lot of stocks above a band, it probably means you're going to get a pause in the market. During this bull market since 2009, There hasn't been big pullbacks because of this overbought signal. On the other hand, when we've had a lot of stocks below the lower Bollinger Band, we've seen significant bottoms coming in. And I called one, I think, on April 11th, and I showed you a picture of why I thought that would happen. In fact, I was actually looking at it again this week, so let me just show you what I meant by that. If you bear with me a second, hopefully nothing embarrassing will come up when I go through this. Something it's under public. I gave a HGSI introduction to Palm Beach user group, and there's one slide I wanted to show. Let me see if I can find it. I was teaching them a little bit, and this was basically it. So I looked at every night. I check this score. I do this in EdgeRater. This is what a bottom looks like when you have a lot of the stocks below the lower band. This is what a top looks like. This is what it looked like June 6th. And let me show you, when I take the S&P 1500 and I start taking the extreme readings, you can see that almost uniformly an extremely low reading within a couple of days there's a reversal. Sometimes it's the reversal day. And I think this has been a very useful thing that I've tracked. This is when I did the program, I think around April 11th. I can't make that bigger to tell you exactly. So a high number of stocks below the lower Bollinger Band has been a great reversal signal for me, at least in this bull market. I haven't seen that on the upside, but I think it's because of the power of the bull that we've been in. So that's an EdgeRater, as are many of these pictures. We look at a market timing view, which is the Woody indicator of percent B times bandwidth on the major indices. And you could see it goes through periods of green to be long, periods to be short, chop. And we've just come out of a very long, probably the longest choppy period in 5 years. And we're trying hard, I think, to still be in a buy signal, but we did get some more yellow come in. So we'll see if we go back to a buy, or do we have some volatility coming in, weakness, and go back into chop, or worse, a down market. I'm not going to spend a whole lot of time here, but just to show you that in addition in EdgeRater, you can build lists of signals. These are George Lee signals, which are a combination of Carter, Elliott, and many others, looking for stocks in a squeeze with various breakouts or breakdowns. That's an automated thing in EdgeRater that you can update intraday. And I know that there's folks who watch my videos who, like me, are big fans of Morales and Catcher. And one of the things that a lot of people like EdgeRater for is the M&K setups. So, for example, on his webinars, Gil talks about his Code Blue. And you can do the Code Blue view in either HGSI or EdgeRater. And the stocks that have the pocket pivots and the forced kahunas come up to the top here. And so you can find the best stocks to go long or go short based upon their criteria. What's really nice with EdgeRater is you can update it intraday. That's coming in HGSI. It can't come soon enough as far as I'm concerned. So as I've now gone through the my analysis, I'll say that I feel like this is a tired bull. I don't think we have any major shots across the bow or major sell signals, but I do think there's enough here to at least be concerned. Now, I mentioned I'm at John Person's program, and as I said, great educator, teacher, has got some great products. Just look at a couple of things I wanted to point out. One of the things that John has taught me about is commitment of trader report in the S&P 500 or other indices. And the commitment of trader report looks at the purchasers. The yellow are the non-commercial speculators, so us. The blue are commercial speculators, hedge funds, big banks. And the red line are usually people that are hedging. If I'm a lean cattle owner and I'm concerned that the price is going to drop before I bring my cattle to market. I might want to hedge. If I'm an airline and I'm concerned about the price of fuel, I might want to hedge. So I look at the ratio, not of the red, I look at the comparison of the small investors in yellow and the big investors in blue. And if you go back to tragedy or calamity days, you can see that the entire way down in 2007 and 2008, we were buying and the pros were selling. Then we hit a bottom in 2009. The pros started early, but they were buying and we went short at the low of the market, we being individual investors. And if I go to today, we're buying, again, as this market's getting higher and higher. Now you can't see it well because it's actually getting smaller and smaller. I think there's confusion, and I think the professionals, rather than having robust selling and shorting, are becoming less short the market, but they're still net short compared to the individual investors. The other thing I wanted to show, which is just pretty awesome, is that, I mean, one of the things you can do with John's stuff is he actually, his PPS indicator, which is a free indicator in TradeStation, or in Thinkorswim rather, this is a daily chart of the ES. And John's all about pivots. He's about moving averages of his pivot points. And then he has a number of signals that come together to form potential buy and sell signals. And you could see his signals are pretty good. They don't always last a long period of time. He went to a sell signal on Wednesday on the ESs, and his target would be somewhere probably is down here, 1864 potentially. Now it could bounce off support here. It could change tomorrow. But I do find it interesting that he has gone to a sell signal, and these little dots are built into into Thinkorswim, and you can actually scan for PPS buy or sells on equities, indexes, etc. And if you haven't checked out John's books or his indicators, I really highly recommend them. On my wall, this is my favorite of his. And maybe it's because I'm mostly a stock guy and the others were heavy into futures and currencies. But I'm actually going back and reading the old ones after I finish this one, the green one. Highly recommend it. You can buy it on Amazon. And for those HGSIers, you'll think John's been to some of Ian's meetings. He uses different words, but there's a lot of overlap. So let's go into HGSI and let's take a look at major market indexes, or major markets plus. We're going to look at the T1, which is all technical driven, more weighted to the last couple of days, but looking back a full 3 weeks. By combo rank, and as I mentioned, silver is up at top. Now you see a split in the market where silver, oil, gold, commodities have moved up, and what's moved down are some of the small stocks, the S&P 1500, the S&P 500. Transports are certainly pulling back. Yet during this period of time, the Dow Jones Industrials, utilities are up there. Utilities were down 1.4%. NASDAQ is still in the upper half. If you look at 5-day performance, the big winner was volatility. It sold off the VIX sum on Friday, down 3%, but up 13.5% over the 5 days. And you could see oil, gas, silver, commodities, and gold were the leaders over the past 5 days. If you look at yesterday, only thing at 1% was the semi, silver at 0.9, and volatility dropped quite a bit. So will we see increase in volatility and a falling market this week, or is the VIX going to continue to settle down and I need to cover my XIV shorts? So let's take a look at some of these indexes. Start with the S&P 500, and so eventually I'll be there. Here it comes. So I'm going to point out there's no Eurekas or Phoenix this week, so let's go into a cleaner view for the indexes. So we maintain a pretty nice long uptrend. In fact, to me, this is a little bit longer than I want to show since March of 09. In 2012, we had a big pullback in November, actually starting in September down into the middle of November. That was the last big pain period of time that many of us experienced, and that was a pullback from top to bottom of about 9%, 9 or 10%. We've been up since that bottom, if you go to closing low, or closing high rather, up about 45% in the last year and a half. Lots of small pullbacks, but clearly still in an uptrend, price at about the 8-day exponential above the 17, the 50, and the 200. So do I think we have risk here? Absolutely. I think that's kind of the tone I'm giving today. But let's not forget we're still very close to all-time highs, and you still have just a little bit above you a natural target of about 2,000 on the S&P 500. If I look at the NYSE, which is a mixture of all kinds of stocks, big, small, a lot of interest-sensitive stocks, similar pattern in a continued uptrend near the all-time highs with about 0.5% pullback over the last couple of days. So is this over with? Is it time to run for the hills? Not yet. I mean, we closed right at the T-line or at the 8-day exponential moving average, still clearly in an uptrend. If I look at the NASDAQ, here is the last substantial pullback of about 10%, ending in beginning of April. And I bet you've made a lot of money on your stocks off that bottom, or you should have. Again, still a little pullback over the last couple of days, but right at the 8-day, which is above the 17, above the 50 and 200. So when I look at the major indexes, it's really hard for me to be that bearish. The Dow looks the same, pull back to the 17-day, probably the deepest pullback of all of them. And then, whoops, I don't want the mid caps, I was looking for the Russell 2000. You can see pulling back a little bit. Now that might just be a little bit of a bull flag as we continue back up. On the other hand, is this just a bear flag, and are we going to break and have a big leg down? And I think we have risk. I don't think I'm seeing signals that this is over, and maybe this is just going to be a small pullback and we continue to run again. I do remind myself that this is June and that this is a time of year when the sell in May and go away is right in the middle. And so, again, clearly not out of risk. Speaking of risk, let's take a look at volatility. And you could see we've had the whack-a-mole phenomenon. Every time it sticks its head up, it gets whacked down. And we have been languishing here. This is a daily. If I go on a weekly, you could see going back really since the market bottomed, we've been at extremely low VIX readings. We had readings of close to 100 during the height of the correction or bear market, but this is even low. You can see the 200 used to be at 25. Now we're sitting off of the low. You can see the line that I drew last week, but really at a multi-year low level of volatility. From a trading perspective, I think you can make money in a persistently low VIX, but when VIX is rising, and when you look at a daily chart, we did get a little bit of a rise this week. A rising VIX is when the market falls. A falling VIX is when I make the most money. So I think the VIX is at a potential inflection point, so we'll need to watch that. That said, it's got a high likelihood in my mind of failing here at the 50-day moving average and going right back down. I mentioned silver and gold. So silver has been the weak stepchild to gold for months. And when I look at my chart, I see some volume came in, whatever that means, but we broke above the 50. And if you go back, it's been since the middle of March since silver has been above the 50-day moving average. So silver is stirring. I know there's been a lot of talk, for example, of silver Wheaton as being one of the, that's Stillwater. What is silver Wheaton? I guess it's SLV. I'm sure we'll find it in a little bit. as one of the stocks. They all look the same. They've broken above the 50. Now gold is, it's the last one you see. Let me just go into GLD. Hold on a second. Since I'm here, here's silver wheaton, SLW. Really an interesting point. Failed at the 200 last year, failed at the 200 in January, got above the 200 and then fell back beneath it. If it breaks above the 200, look for a retest, and if it holds, this might be something that's interesting. It's certainly, compared to SLV and some of the others, it really is currently leading them. If I look at gold, similar pattern, but below the 50 and the 200. I think for the first time in a while, silver may actually look better. Sometimes you just get lucky. When I did that presentation a few days ago, I'm sitting in front of these people that are new to HGSI, and let's see, let me get you the right day. So it's not going to even get smaller. All right, hold on one second. Let me make it bigger. One more time. So I'm sitting in front of an audience, demonstrating how I use HGSI. So it's Friday, Thursday, Wednesday. And this was the pattern on JNUG, J-N-U-G, the Junior Gold Mine 3X Direction, not to be used without knowing the risks of these entities. And I use this as an example of some of my favorite signals. Now it's a little bit young, so it doesn't have a lot of trading, which is why I had to make the bars pretty big to fill up my screen. But my technicals have turned green above. The bongo looks good. The weekly is still red because it's been in a downtrend, but the daily has gone green. It's gone from red to yellow accumulation, so from a D to a C, that's improving. The forces are green. It had a DI crossover. It had a mobile breakout from a squeeze and a PSAR reversion the prior week. And then on the day that I had my presentation, it had a big kahuna. So I highlighted this as a stock that I found because my scans picked up, pull back to the 50, and a kahuna. Now the interesting thing is, so I made this a stock that I was interested in. I actually bought it pre-market at 18:30 on Wednesday morning, and this is a stock, it made HGSI and me look pretty smart. Now I don't know if it's done running, and I sold half my position on Friday, but it had a nice quick return. But it really demonstrates to me why our indicators are useful, because it helped me find a stock that I wouldn't have found, that met a lot of the criteria that I like to make a buy. I showed it to an audience that was novice, and I know I made money on that selection. So again, I haven't done anything except to show you that the market is pulled back a little bit. Again, I don't think this bull is over. That's just my gut. I'm going to watch it, not trade the market I think we should have. I'm going to trade the market I have, and I'm going to watch volatility. But clearly there's evidence of some damage to the market at where we're sitting. All right, the next thing I want to look at is the industry groups as part of top down. 196. I think last week there were 80 or 90 that were positive by force. And I'm going to go and apply force index here and see how many are up versus down. I've got 42 to the upside. Semiconductors, beverages, other commercial services, Weight Watchers to the downside. Really not much to the downside, but a lot less to the upside. Well, that kind of fits the market that I see from the indexes. I don't see a big rollover yet, but I see some damage, some weakness, and I think I see the same thing here with a lesser number of positive groups, yet continue to have very few to the downside. Now, as always, I'm going to go through the top bunch, but let's just take a step back and look and see what's working, and let's just go by industry group. It doesn't work with the new letters, so I'm going to nix that. Oil exploration, integrated oils, oil and gas services, renewable energy, coal, midstream, refiners, renewable energy, marine transport. Anybody want to accept the fact or agree with me that there's strength in energy? Absolutely. Energy is the leader right now. I'm sure Iraq, being a major OPEC contributor now, is the concern. Biotech, which had sold off hard, is back up top. Something else that's interesting is casinos and gaming. Now, what's interesting, and I like to pull my gurus' ideas together, is if well, let's do this. I know I'm going to regret this later, but I'm going to run Las Vegas Sands. Let's see if that'll do it here. It's not going to do it. Let me create something here. Go down here. Because LVS is not a gaming stock. Put WIN and MPEL. And I'm going to look at the daily chart of each of them. Whoops. So bounced off of support. This is Las Vegas Sands. Now I think on my Genesis platform, a couple of these had buy signals. Let's take a look at WIN. WIN has a daily buy signal on Friday. You can see it right there. And then the other one is MPEL. And these things all sold off hard and then had a daily buy signal a couple days back. Each of these sold off hard because of the some softness or perceived softness in Macau. And I think all of them turning around at the same time, while at the same time casino gaming is moving up, tells me that this might be a place you want to go fishing this week. Midstream still strong. REITs had sold off, and you could see that on several of these, the 13-day force was negative, which means that they've been down over the last 13, 15 days, at least from price change times volume. But they made it back on the list as well. So maybe utilities and the REITs and tobacco are coming back, just like gold and silver were, because of the increased risk in the market. So find your industry group, right-click, change the index group, and let's just take a look at the top stocks here. I see one of my favorites, which is Diamondback, near the top. Fang, which I know a number of people own. And one guy who I actually listened to actually says he owns it because he loves the name. Actually, so does everybody I know that owns a stock. They love the name. So fundamentally, it makes money. This is Oxy Petroleum. No earnings per share growth, which might bother me. Everything's green on the technicals. It had a mobile breakout a couple days ago. It had pocket pivots, clearly in an uptrend. Here's the group strength, clearly a leader. Oxy Petroleum pays a dividend of 2.8%. I think the pure play oil companies are really benefiting from what's going on in Iraq. Here's Anadarko in a prolonged base, then a series of pocket pivots and a kahuna, big move up on Wednesday. Everything is green. Mobile breakout on Tuesday, wants to go higher. EOG Resources, again, beautiful charts. Now, I didn't mention this earlier, but these stocks are all getting up at the high end of the high jump, which is, as we've talked about, is a calculation of extension. So EOG, I might be a little concerned that's a little bit overly extended. And here's Fang, extended, absolutely. Multiple pocket pivots in the last week, breaking out new highs. And the other one that, there's a couple that I like. BCEI is one that I own, and it broke out about the same time as Fang, had to do with some lease or land changes. I'm a sucker for earnings, and you can see the earnings per share growth here a little bit different than some of the others we looked at. Fang are also good. HK, this is a CEO whose name is escaping me that sold HWK, if I remember correctly. And I think to Statoil, I made a lot of money in that. He's got Halcone. I'm starting to hear about it now in hallways as a big mover. They're starting to make money. This is purely a play on a CEO who's demonstrated the ability of creating value and flipping companies. KOG is an inexpensive oil play. So I'm in a number of these oil plays. I think right now it's a hot spot to be. Multiple pocket pivots in KOG this week. getting close to its all-time highs. We'll see if we can take that out. So oil exploration, there are many there. I also got a piece of Ultra Petroleum. Actually got some $25 calls that I'm going to have to figure out what to do with this week. Why my portfolio was up in the HGSI basic portfolio and IBD 50 were down is because I own a bunch of these oil plays and the timing was right. So not extended at all. Good earnings coming into the stock. Everything greens up here. A bunch of pocket pivots in a kahuna. I suspect I'm going to take the stock and hold on because I think this one's in an uptrend and I'm buying it at a good buy point and not just cashing in my options. All right, so let's go back. That's oil exploration production, clearly where a lot of the fun is. Biotech, this was the leaders to the downside in March, and it's one of the leaders to the upside here. So very quickly, I know something about many of these stocks, and I'll just give you my twist, and I'm going to go through about 10 of them. First one is Karyopharm Therapeutics. Think a lot about Intercept. They have a drug for a cancer. It's had very early studies. They had a complete remission in a refractory myeloma patient. Onyx was bought by Amgen for similar types of data, but with an approved drug. Their drug is years away. This is probably too much, too fast. But it's on the top because of both of its big price move and the 5 million shares, 6 million shares traded. This is a stock that normally traded 300,000. So I would be very careful of this. This is on basis of phase 1 and phase 2 data. It's a long ways from an approved product, but it's promising. Let this one pull back down and then worry about it, kind of like I talked about Intercept last week. Identics, this was a buyout because they have a Hep C product that's being bought by Merck. Mankind, interesting stock here. Ghilardi and I both have our concerns about their product. They make a new inhalable insulin formulation. They've been turned down by the FDA twice. They go back to the FDA in July. I think odds are in their favor that they get approved this time. There still will be logistics. I'd like to see them announce a marketing partner, and we started hearing about it this week. This is one that goes to 20 on an approval. It goes to 2 with a denial. Might be worth an interesting options play. ISIS, I talked about this when I went long, and I'm still long this stock. It's another of these pre-commercial biotechs. It's in an uptrend. I bought it off the double bottom in the PSAR reversal. I held it as it retested here. I think it's still going up. I might worry about resistance here. I'm probably not long this stock for a long time, but I'm still long right now. Intermune, I blew this one. I got stopped out here, and I got bought back in, and I got stopped out here, and I didn't get back in. Made money on it in both trades, but I left most of it behind. They have a new drug for pulmonary fibrosis, and they've been through the initial stages of an FDA approval. Everybody's expecting an approval soon, and multiple pocket pivots. I would buy this again in a heartbeat on a pullback. Achelon, I think they have a hepatitis C drug, if I remember correctly, HIV, hepatitis resistant. One of these preclinical big breakout bull flag. I might be looking to get into this if it breaks out above the flag, but it's one of these no earnings, no revenue story stocks. Northwest Bio, they have a treatment for brain cancer. They don't make any money. They had some good research presented over the last couple of weeks, a mobile breakout on Wednesday. Everything went green, multiple kahunas. I was sitting at lunch and talking about these stocks, and what I said is I think you have to recognize that these are speculative, high risk, and you buy a couple of them and you forget about them. You don't trade them. Well, you can trade them if you want, but to me, I buy these and forget because if they hit, they're a huge return, and they're just going to be like an amoeba until that happens. They're going to go up a little bit on good news. They're going to have some motion that doesn't seem to have any meaning to it, and then all of a sudden you'll get to a point where they get an approval or a denial, and then stocks will take off. Northwest Bio, speculative. There's the biotech index. Gilead, still one of my favorites. It's sort of in the penalty box right now. It's pulled below the 17. I'm still a believer in the story. I bought a synthetic long, so I bought calls and sold puts at 75 back when it was coming up here-ish, and I'm still holding that position. And great earnings per share growth, a lot of news about the pricing of their product and the competition. I think people forget they've got a leukemia drug, just like pharmacyclics, that's about a year from now, and they are the ones that have made HIV a second new page of the news, not a front page story, by having some major activity. And MPS, there's been a lot of speculation about Shire taking it over. That's enough of that list. You didn't see Celgene on that one up at the top. It had been running up until the last couple of days. The next one on the list is semiconductor devices. I'm big into Micron. There's a couple here that I like. Actually, there's quite a few. This is Intel, had great earnings. It's like a growth stock again. A big gap up here. You can see the group strength, Kahuna, pocket pivot, massive volume. Everything's green. My only problem with Intel is it's a great story, but I missed it, and I don't see earnings power that's going to keep it doing this. On the other hand, here's my favorite, which I've been long for some time, and hopefully many of you have been. Micron had a bunch of upgrades to $40 to $50 price targets. That's why it moved this week here. I'm still long it and hope to be long it for quite some time. I'm not a big fan of the Cree lights, but something's going on here. You know, it's starting to get interesting. It's below the 200, which bothers me. That said, you had a pocket pivot, a Kahuna volume, strong group strength, mostly green up here, and a mobile breakout from a squeeze. You know, as much as I don't like to fish down here on the bottom, I'm tempted. And what I'm tempted is, let me go into TradeStation. Let's go into my Scott indicators. Let's put, don't even show me that one. Cree. Oh, you're not going to come, all right, I'm going to type it here. I'm tempted to, if this stock trades up on Monday, to go long. I recognize that it's been in the penalty box. I look at this, and the reason why I'm tempted, daily PSAR is supportive. Huge volume up day on Friday, getting through the 50-day moving average. My little dots. There's no Bible gap up, but I do have a pocket pivot. I have a what is this one? A MOBO breakout, PSAR supportive, and a Kahuna force. So I have a lot of signals here, and I'm going to look for it to take out the high and maybe trade it. But since my whole premise of buying this is that it is broken above the 50, my stop won't be very far down this bar, probably halfway down this bar, putting just a buck and a half at risk. I made a big mistake this week, and I tell you my wins, I got to tell you my losses. I didn't follow one of my rules. I was traveling. I thought earnings season was done, and Finisar, which was a holding, not a holding anymore, reported on Wednesday. I missed it. Unfortunately, they missed it too. They dropped 22% on Friday after was it Friday or Thursday after their earnings came out? Whatever day their earnings came out. Maybe Thursday night they came out, and they got clobbered on Friday. Just a horrible. They lowered their margins. They raised their revenue, but they dropped their earnings projections. They sold off hard. So the message is, and this is, I think it's a strong message, know when your earnings come out, and when you see a stock like Finisar that is a earnings story, when they miss, they get pummeled. This one missed. Now, it'll start to base and might become a good story again. Shame on Jeff. Fortunately, I had $25 calls, and I didn't get hurt as much as I could have, but I blew that one. I hate to give back profits, though. They were up in the money, and then boom. Internet media, Yelp. Somebody buys Open Table for too much money, it wakes up the whole sector. I've got a couple of these. Yelp has made everybody's screens. A lot of people are talking about Yelp this week, and you can see Yelp breaking above the 200-day moving average on massive volume and a kahuna. Everything is green here. Bible gap up. I don't know how to play these stocks. I'm not good at them because they don't make money. And I think this one's moving up on news and wondering who's going to buy them. Is it Yahoo? Perhaps. But there are rules of how to play Bible gap ups. And if you don't know Morales and Katcher, you should, because I think this is one that you can play, but there are rules of Bible gap ups. Twitter, I went long this about 10 days ago. I think on this kahuna here, in a nice move up, it's at resistance. We'll see if it can break above the 50. I'm a little nervous about that. I also am long YY, some 60 calls that I bought down here that are now about 10 bucks in the money. Force kahuna. This one, unlike the others, has major earnings per share growth. Then again, so did SFUN. And again, all you got to do is miss your earnings, do a split that the market doesn't like, and you go from being a high flyer into the toilet bowl. And as right now, SFUN, maybe the bingo is a signal that it might be time to get back in again soon. Right now, SFUN is also in the proverbial penalty box. I watched too much hockey this week. That's why I'm using hockey terms. I apologize. All right, let me close this chart. What else do we have? Baidu, we looked at it last time, talked about it looked like it was making a move. It was up 3% on the week, so I'm sure when I look at it right now, it's still making a move. Come on. Kind of looks a lot like YY, doesn't it? Based. Boom. All right. Top-down investing. I'm not in any rush tonight because I'm on the road. We'll hit return. Next one, internet-based services. Here's Open Table. We don't need to look at that. I'm into LinkedIn. It's had a nice run. I've been into it for a short period of time. And you could see LinkedIn, Pocket Pivot, and a kahuna took out the 50. I think I went into it back. I can't remember which of these days I went into LinkedIn. It's broke above the 50, turning green up above, pocket pivots. This is probably unrealistic, a run up to the 200, but I'm long and I'll continue to be long until I see something that tells me not to be long. HomeAway was a trash stock that is moving back up with some of these other internet plays. Perhaps it's related to some acquisitions like the Open Table by Priceline. This would be a potential Priceline acquisition at some point as well. And Zillow, a company that continues to just push higher and higher, lots of bears on the street, doesn't make much money, but I'm sort of considering moving back into a house, and boy, are they aggressive. You make the mistake of giving them your email address, and boy, oh boy, am I finding out a lot of houses in my price range that are available. Even those that I'm not interested. Integrated oils, back with the energy. We'll just look at the first two, Chevron and Sucor. And I'll look at Petrobras as well. Not much in the way of earnings per share growth. Pays a 3.4% dividend, breaking out to new highs. Obviously, this group is moving because of the price of oil. Sucor, pull back to 17, breaking out multiple pocket pivots. Huge volume coming in. Again, similar earnings picture as the last. 2% dividend. And then one that's interesting is Petrobras. They have special issues around raising money, pricing of their product, government influence, government ownership. But this is I remember 5-10 years ago, they made some major deep water finds. And unfortunately, for people that are long-term holders of Petrobras, they've been on a downside for a long time. You can see in 2008, they were a $70 stock. Eventually, they're going to go up because they do have the oil in an area in a world of diminishing reserves. This is a monthly break above the PSAR. Here's a weekly break above the 50. Amazing group strength. And here's a daily where they had a pullback and breaking up again. At some point, this is a place you want to be. Maybe that time is now. Right click and back. Number 7 on the list, infrastructure software. Imagine Microsoft and Intel being in the top 10 industry groups. What is this world coming to? So Microsoft gapped up on Friday. Everything is green. Had a kahuna. Pays a dividend of 2.7%. Splunk. Now you got a bunch of stocks that are interesting because these are high flyers that have been hammered, don't make money, growing revenue basis. So whether it's Splunk, FireEye, ServiceNow, I want to put Symantec in the same category. Where's Workday? A number of infrastructure software plays that might be setting up. These things are beaten down, so be careful. And they'd be in the bottom fish category except for Microsoft. Precious metals and mining, no surprise that they're here with the improvement in gold and silver. Take a look at the top couple. And then I'm going to go back to the fundies in a second. American Barracks off the bottom, multiple kahunas, pocket pivot, volume turning green, up above. Earnings are getting smaller. If there's wars, if there's risk in this world, gold's likely to go up. Yamani Gold, AUY, looks a lot healthier, coming off a double bottom here, moving up, green there. Gold Corp, similar pattern. The challenge here is it really ready this time to go up, or is this just another small move and it's going back down to retest the lows? And if you look at EPS ranks and relative strength ranks on these guys, it explains part of the problem. Interestingly, at least this week, group rank is up at the top. If I go back and look at number 8, I believe. I messed up. Let me go back down here. That was 8. Oil gas services. I've been a big bull on this group for months. My big holding is Halliburton, but we've looked at Schlumberger and Halliburton as being twins, and big uptrend in Schlumberger continues. Rig, much less interesting, below the 200-day moving average. Here's Halliburton, continues a nice run up. Love both Halliburton and Schlumberger. It didn't do much for me. After last week, I bought some Weatherford International. A little bit of a bull flag, perhaps. Maybe I'll get something out of it this week. I did like its earnings per share growth. But oil services remain a place to be. And then just for completeness sake, number 10 in our list, I believe that was the gaming stocks. And let's see what the highest ranked are using the Force Index. We'll go through the first 5. So these are beaten down. Here's IGT, threatening the 200-day moving average. Everything is green, massive volume. I might right clip, go to more info from Web and see if they had earnings or something come out on Friday, because that was a big move, or what the news was. All right, so I guess IGT put itself up for sale, but others in the group, MPEL, that was one that has a buy signal on Persons indicators back on this date here. We have WIN, and we have Las Vegas Sands. All their charts look horrible. They all have sold off. They had seasonality against them, and they had some slowing revenue in Macau. But it looks to me like perhaps they're changing their tune. So that's our top-down review. Just to quickly look at the downside and see if there's anything we want to look there. Semiconductor manufacturing, none of the stocks made the list. That group was also negative last week, but there's really not much here on the the downside. It's a market that, rather than have sold off hard and corrected, it's a market that's struggling to make new highs. The next thing I do is a little bit of bottoms up attack to see if I can find any other interesting stocks. Now, in a market that's a rip-roaring bull, I'm much more interested in bottom fishing. This market's tired, so my long versus short versus neutral, I'm not going to be all in this week unless I see the market start to take out new highs. One of my favorite tests is a group inclusion report. So the story behind this is simple. Within HGSI, I have a number of user groups that I do on a weekly basis. There's also the smart groups that are automated for you. And I find my favorite groups between my own personal groups and the smart groups. And what I wanted to do is say, if this represents the best stocks, if these lists represent some of the best stocks to buy, if there are stocks that make it to multiple lists, then wouldn't those be a good thing to buy? So I'm going to take all my favorite bullish groups and see if there are any stocks that find themselves into a lot. So I'm picking my favorite groups: breakout from a squeeze, pull back to the 50-day, in Morales and Catcher, Bible gap ups and pocket pivots. And then I'm going to go down and add a few other things. I'm going to add fastest growing, strong fundies, HGS 100, the IBD 50, the Market Smith 250, the mobile breakouts from a squeeze, and I already got the sprinters up above. Tim Higgett filter, because that filter always finds me great stocks, and maybe even the top vector best. Then I'm going to go down here, and I'm going to say yes, make group from list. We're going to call it Group Inclusion Report Web, and this today is 6.15, and I only want to look at 15 before I say goodnight to you. So I'm going to pick and see if there's 15 stocks that end up on multiple lists. I do not want to create an index, so when that says, I'm going to say no. So a couple things. It opens up, so here's the top groups. Micron, we already looked at it. EOG. Sanchez is another of the smaller oil companies. We looked at KOG, CLR, RF Micro, Matador, Diamondback, Lam Research, IDTI, EXP. Here's my BCEI, Synergy Resources. You notice some themes here: technology and energy. Technology and energy. If I go down here, I find the group we just did, the 15 stocks. So let's very quickly go through these 15 and see if there's anything that stands out and says, buy me. Here's ARRS. This is a technology play, had some great earnings here. Pull back to the 50. Nice run up, pull back to the 17. Looks to me like it's setting up for another run up. I'd like to see it take out, I'd like to see a PSAR reversal, and then I might be interested in getting in. That's about $1 away. So I'm going to be watching for that. Honestly, if this stock had a pocket pivot tomorrow, or a Bible gap up, or a forced kahuna, I might be getting into Eris Group. BCII, I already own this guy. Big gap up here, nice 45-degree run. I'll ride this one until it stops. Continental Resources is another one of my favorites, long-term oil and gas exploration play. We looked at so many of these. This is just another lower left, upper right, bunch of pocket pivots. Everything is green, makes money. Diamondback, Fang, great earnings per share growth. Lower left, upper right, everything is green, makes money. Eagle Materials. This was interesting last week. Housing seems to be a miss, but some of the major construction companies like Chicago Bridge and Iron were up, as well as gypsum and cement. So this is the cement company. You see it's got earnings per share, nice moving up, had some pocket pivots and a kahuna, huge volume. You never like to see this topping tail action on after its Bible gap up, but it's still potentially buyable. You can still buy it less than halfway up the tail. It's EXP, and I believe this number came up after earnings, or it could have been an upgrade. So we'll look at more info from Web, FinViz, and what do we see? We see dividend outlook positive there. Doesn't say cement demand seen rock solid. So I guess the demand is driving it, not any earnings. So that was news related. Next one's EOG, where I looked at this energy player. IDTI, we talked about technology being strong. Look at the earnings per share on this fella. Huge earnings coming in. Trades at a multiple of 40, and it's growing at a multiple of hundreds. You keep your PE the same or even lower, the stock's going up. Multiple pocket pivots in a row, breaking out to what I think are all-time highs. Getting extended, but interesting nonetheless. KOG, I showed you this, a junior oil, trying to break out to all-time highs. Lam Research, another technology play with great earnings per share growth. And look at this, between 612 and 614, it's gone from 740 million quarterly revenue up to 1.3 billion. So clearly a nice move coming into Lam Research from a company perspective, from a revenue, and I think you see that in earnings and a big move in the stock. Matador, probably the best buy point of the energy stocks. It doesn't have the same energy power going forward. Pull back to the 50, everything is green, but you're coming off of a good buy area with a big pocket pivot on Thursday. That might be interesting. We already looked at Micron. You want to see impressive, just go to a weekly story on Micron. Since it broke out in January of 13, it's run from about $8 up to $32, and as I said, it's got projections of 40 to 50 on the street right now. So I've been in this for a while. We talked about it every week for about a year. RFMD, Street liked its proposed acquisition of TriQuint Semiconductor. I think that acquisition is finished. Nice lower left, upper right, everything is green. Again, our earnings coming back. There's a theme here. A lot of these stocks have great earnings. Sanchez, great earnings. Same time as BCEI, a big gap up, and I think it was the same type of news. Again, if I right-click, more info from Web, FinViz, pick your favorite resource. I thought that they bought. All right, so the Catarina deal was what they purchased. So around June 10th is when they announced some acquisition, or actually that was more recent. But this is when they announced some acquisition of some property, same time as BCI. Synergy Resources, another junior oil, great earnings per share growth, pull back to the 50, running again. Triangle Petroleum, I don't need to say it again, great, it had great earnings. I wonder about that quarter. Junior Petroleum running again. So we know we're the place to be. Other things that I do from a top down before I say goodbye is the warehouse view. I have a tendency of liking certain groups, so I will go to reference groups, all securities, and I'll go up to sprinters. Notice all the green. These are fundamentally and technically strong stocks, and I often go through the top 10 or 20 here. And what do you see? You have EP, biofuel, technology, midstream, EP, finally a rail and freight. It's up because of the transportation of energy. EP company, here's your cement company, EP. The story's pretty clear. Energy exploration and production is where it's at until it's not anymore. All it will take is news, and then they'll all come back. You don't want to be the last one in, and you don't want to be the last one out. Other things that I like to do is I like to go into the views, and I like to go in mine, for example, and I find Kuna Force within 2% of free parking. So these are stocks that by definition are near the 50-day moving average and had a kahuna. So I look for some of my pullbacks here. So I may not find anything. I don't like this deep pullback, but it's at the 50 with a kahuna, so I'm going to go next. Nextera, that's kind of a nice up, shallow pullback. Multiple pocket pivots, volume coming in. Kahunas galore. I don't like the earning. Is this a utility? It's a utility, and it pays a 3% dividend. Not my kind of play, but the kind of stock I like to buy. Owings in Illinois. Going sideways for too long, not interested. Annaly Capital Management. I never know what to do with this guy. But when I see a downtrend like this, it's hard for me to get excited. It's in an uptrend since December, multiple pocket pivots. Just not my cup of tea, but it does pay a 10.3% dividend. So might be something that some of you that are looking for income might want to consider. This is probably the type of pattern I'm most interested in. I'm in an uptrend. I'm going sideways. Now I need to see momentum come in here to get me into the stock. I don't see any good momentum. In fact, I see a mobile breakdown from a squeeze and a PSAR reversal. However, I read something this weekend that said crack spread increasing, which is good for refiners. I like the fact that this one makes money. That means things like Valero, PSX might be attractive if the crack spread is still going up. Here's something that's really neat about HGSI. I right-click, change to industry group. I get to refiners, and I can see all the different refiners and run through them real quick, because if I'm right, I might want a refiner, and I might be looking for a pattern that meets what I like to own, and at least getting into something that is in the right group, and this tells me who's in that group. So on that note, let's see if there's any other searches I might want to do. I look at volume surges. So I'll look at my tight filter on a 5X. Looked at most of these already, but these are stocks that had major volume surges this week. I might go in here and look at this group here where they're squeezing and the price is right underneath the PSAR. So if I'm looking for things that are right close to having a buy signal come in, this is one I like, EQT. Uptrend, sideways at the 50, had a kahuna 2 days ago, in a squeeze, mostly green, makes money right underneath the PSAR. It's an expensive stock, pays a nominal dividend, but that's a pattern that I'm interested in. Xilinx, it's below the 200, I'm not too interested. Checkpoint Software, I'm interested. Uptrend, sideways, above the 50, had a mobile breakout from a squeeze on Friday. If this thing breaks above its PSAR, I might set a buy stop just above it. So what I'm really showing you is not stocks that you should go out and buy, but I'm trying to show you how I use the scans to find stocks that meet my favorite criteria. Those of you who are fans of pocket pivots and Bible gap ups can just go in here and start looking at the stocks that meet the criteria. There's a lot of pocket pivots this week. So on that note, I just want to show one other way of how I pull some of my influences together. If you read about and learn about John Person's scanning and different things that he does, his PPS buy and sell signals are actually quite good. I can scan them for those that are bi-weekly and then have a new buy daily. I can have them buy just a buy daily, and there's a number of different settings. So he does his automated in TradeStation and in Genesis against the S&P 500. What I now do is I make a much bigger buy list, and I run this on a daily basis, trying to find my type of stocks that are breaking out. And a lot of the ones we talked about are in here. These all have a buy signal, so one we might want to look at is Yelp again. And you could see, let me just let the data load, that you've got a daily buy, a weekly buy, and then I get into the charts that I typically use, and I see all kinds of my favorite signals, but I see a PSAR reversal on Friday and a Bible gap up, huge volume. So I have found what works for me. I don't expect that everything that I do works for anybody else. But as I always say, it's your responsibility to become your own guru, get educated, get the right tools, create your own trading style, and make money. Sounds good to me. Y'all have a great week. Trade the market we get. Of course, since it's 8:59, because I'm on the West Coast, it's only 6 p.m. I want to know what the futures are doing too before I say goodbye. I know China opened up down, and our futures are, give me some numbers. Down 10 points on the NASDAQ, 41 on the Dow, 7 on the S&P. So I think what we're seeing is weakness related to the world. So my XIV short and my oil holdings will probably help me this week, as will my gold. Have a great week. See you all next week. Thank you.